So on this Tuesday, it's our Tuesday live stream where we open it up for Q&A to talk about all things real estate investing and the current state of the market. We're going to be talking about the infrastructure package as it relates to President Biden, where we are with that infrastructure package, and is it good for investors? Is it good for investors of real estate variety like ourselves, who are long-term buy and hold investors? You know, we teach you obviously how to turn those short-term profits, whether it's, in the 401k, whether it's from your job, whether it's the stock market or crypto or wherever else you're making short-term profits. Maybe Vegas, I don't know, poker table, and turning it into long-term stores of wealth in real estate. And that's what this channel is all about. So greetings to everyone. Steve Watson says, my min pin Dobby and I are eagerly looking forward to today's show. Good to see you. See you. Can I give any quick thoughts about BTC before going into Biden? Yeah, it's crap in the bed right now. If you go back and watch today's live show where I went through all of the details on exactly why that is, but I think it's heading down to about 20. So that's my thought. That is my thought. Mainstream media is spinning this idea. I love watching mainstream media. It's so funny to watch their narratives. They're saying that it's dropping because of the FBI seizure of what happened with the Colonial Pipeline. They managed to get about half of that money back for the ransomware attack on the Colonial Pipeline, but that's just total garbage. I mean, it was already dropping well before that news, and it has nothing to do with that. But that's how the mainstream media likes to spin it. Wants to scare you back into Wall Street, into those types of plays, instead of where this stuff actually is. So Andre, Michael is here. Good to see all of you. Hello from Russia. Good to see you. Hello from Texas, Rose. Good to see you. Yep. All right, we're going to talk about, we'll open it up for some Q&A here in just a little bit, but first we're going to talk about what's going on in the market, real estate market. Pull up my notes here. Jessica, thank you so much. I hope you're having a great day as well. Chris Rankin from North Carolina, good to see you. Hey, Stephanie, good to see you. Make sure the camera's all up here. You see GameStop collapsing, AMC collapsing. Again, if you're watching this channel, we talk about long-term stores of wealth, real value. Grover is attacking back here. What are you attacking back there? Huh? Hey, Neetham, good to see you. Odin from Florida is good. Good to see you. Pollux, World of Entertainment, is here from Pittsburgh. Teresa from Michigan. Hello from London. I'm going to get started here in a moment. I'd like to welcome everyone in. This is the time of day where Grover goes crazy attacking animals and stuff. Stuffed animals. What you got over there, buddy? It's hard to keep the camera on him. Yeah, that'll be helpful during the show. Squeaky toy. Can you guys hear that growling, by the way? Grover, What are you doing, man? Oh, brother. It's going to be an interesting show. Man. Yeah, that's like... So right now, this is like that stuffed animal represents all these like stock market investors this morning, like investing in GameStop and AMC and getting hammered. Yeah, that's unfortunate, but that's the case. Literally plunging like $100 in a short amount of time, getting slaughtered just a short time ago. That's GameStop, AMC investors over there. Grover's attacking the crap out of them. And Bitcoin investors too right now. Bitcoin, like if you didn't have stop losses set, holy smokes, you're getting smoked right now. Hey Antonio, good to see you. Steve Watson, does your mini pin go freaking crazy like this guy? Like really, like the same time of day, he always kind of does this. Like, and I took him on a nice walk this morning. Like, but he, you know, they're a ball of energy, aren't they? And then there's like this one time a day when he just like goes crazy. Then I'll run him around the house and wear him out. And then he'll go like right to sleep. All right. Welcome into the Real Estate Investing Show. So glad to see you all today. The big question on everyone's mind is, number one, when the heck are we going to get this new infrastructure package from President Biden? When are we going to see actual movement out of Congress on the infrastructure plan? Are the Democrats continuing to try to work with Republicans? For what purpose? I don't know. Team Biden has already come down about $1 trillion in their infrastructure proposal. What does this all mean, though, for real estate investors? That's what this show is all about, helping you become a more intelligent real estate investor. I believe it's the number one way to preserve our wealth, and it's the number one way to build wealth because there's no vehicle like it, nothing. Where else can you put 20% down and then have a bank provide 80% funding for you to buy an asset? Try to do that with gold. Try to do that with stocks. Try to do that with crypto. Try to do that with just about anything else. Bank's not going to do that, but they will do that with real estate investing. And it's the number one hedge against inflation. It's the number one tax shelter. It is one fantastic vehicle in the tax code. After all, that's why most members of Congress are real estate investors. So that's why the tax code reflects that. So what will the infrastructure package mean for real estate investors? And this is an interesting question. And I think this piece really kind of sums up what I'm seeing on why Joe Biden's infrastructure plan could be a big win for real estate investors. So let's go through some of the bigger details in this. It's expected, depending on the price tags on all of this, it could be, unless it gets gutted, around $2.3 trillion. Now, when I say $2.3 trillion, that's what Team Biden wants to do. But if Democrats are going to try to work with Republicans and they're going to push it through Congress, it's going to be significantly less than that. Now, if they go through the budget reconciliation process, that means basically they don't need to work with Republicans and they will directly move this legislation through. It will be a budget reconciliation process, which basically means that they don't even need to really do anything with Republicans. They can do it without Republicans and they can go it alone, basically. That's how the infrastructure plan could come together. That's exactly what they did on the most recent stimulus plan. But you might have individuals like West Virginia Senator Joe Manchin, who is going to say, no, we want to work with Republicans, and therefore doing it any kind of reconciliation way is not going to fly. Anyway, the plan is currently miles away from what Republicans want, and so we'll see. Again, take this all with a grain of salt at this point. But in a recently released counteroffer from Republicans, it would greatly diminish the impact of this. And you know, Democrats have said this is pretty much a non-starter with what Republicans want. Come back to the table, and we'll see where we go. President Biden today, before his trip, is supposed to meet with Senator Shelley Moore Capito of West Virginia. She is the Republican senator from West Virginia, and Joe Manchin is the Democrat senator from West Virginia, but they're basically both Republicans, let's be honest. So she's going to meet with President Biden today. Can they advance this thing? Okay, what's in this? Roads, bridges, would give companies better access to consumers, could lead to massive new business ventures, new jobs would be popping up in certain parts of the country, would drive housing demand all around. So imagine entire new subdivisions being built as a result of new business parks being rolling out, new green energy businesses that would be rolling into particular neighborhoods. This would be a boon for housing. New public transportation options. One of the big pieces that I'm most interested in this, because I'm a progressive, I'm a proud progressive, that I think one of the groups of people that have been tremendously harmed by the pandemic, not only just because of the virus and living in close quarters, but it's those that but also didn't have access to public transportation. And so public transportation was slashed left and right during the pandemic. People that didn't have cars couldn't get to a job, couldn't get to a grocery store because you had subways shut down or really greatly reduced in the number of options. Buses completely shut down, or not completely shut down, but many routes reduced. Trains, all of it, completely reduced. And what did that do? That hit low income, low middle class Americans the hardest. So an increase in public transportation, new rail systems, new bus routes, all sorts of new energy incentives for electric vehicles, electric vehicle charging hubs, electric buses, all of that. What that does is that, of course, it brings infrastructure to neighborhoods that maybe didn't have access to it before, and it could bring new population growth, new jobs to certain sectors and to certain neighborhoods. This is incredibly important. So again, new public transportation options would have the same effect. We see this in city after city, subdivision after subdivision. When you can bring in public transportation, you're going to get greater access to tenants. You're going to get greater access to jobs. All of it works. Okay, all of this it has to be a well-oiled machine. Biden's proposal would provide $213 billion for building, renovating, and retrofitting 2 million homes and housing units across the country. A lot of that would be paid for from grant programs. And the president is also pushing for the passage of the Neighborhood Homes and Investment Act, which would offer $20 billion in tax credits to housing developers and investors to go in and build and renovate nearly 500,000 owner-occupied homes. So a lot of blighted homes, a lot of areas that have really been struggling. This would offer $20 billion in tax credits for in real estate investors and developers out there to go in and fix up these homes. 500,000 of them. Remember, folks, we have an affordable housing crisis in the United States, and we need units badly. One of the reasons why during the pandemic, home builders were considered an essential service. Another area of growth would benefit anyone who wants to make money by investing in real estate. So Corey Burr of the Sotheby's International Realty says that Biden's plan will benefit anyone who wants to make money by investing in real estate. If the program actually targets worthwhile improvements to airports, roads, bridges, railroads, pipelines, water security, the electric grid, and the internet, all of these in actual infrastructure investments will make the quality of life in America better. And by extension, it'll make real estate more valuable. Let's just unpack those a little bit here. Let's just talk about airports, for instance. In the areas where we have access to good airports, efficient airports, you're likely to have people who are happy to move outside of a Houston area. They're happy to move to a Lubbock, Texas, where they have a decent airport, a good airport, a new sort of modern airport that they can get to and from pretty quickly for business. They can save a lot of money by living in these areas. They pay a fraction of the cost of living in these areas. The same thing is true of roads. Let's take Scranton, Pennsylvania, for example, right? I could live in a Scranton, Pennsylvania, and commute to New York City. Yeah, it's a 2-hour drive, but if the roads are great, I won't maybe mind the commute. If I can have a great school district and my kids, I can save a lot of money on a house instead of having to live in New York City or outside of New York City. In the New York area, I can live in a cheaper area like Scranton or Hawley, Pennsylvania, or those types of areas if I have access to great roads. And we've seen that happen as a result. Bridges, the same thing, crumbling infrastructure. Railroads, if we can deliver goods and services, people can buy cars, new cars are delivered. All kinds of food and other items can be delivered by rail in the United States. All of this. Water security. One of the big pieces of this is fixing and getting rid of all of those lead pipes in the nation. I mean, the fact that we're still, our kids going to school having horrible drinking water, like, come on, right? And lead pipes, that's ridiculous. So this would retrofit all of these schools. This could incredibly update certain school districts so that if you're in school districts that are kind of on the margins, it would be an opportunity for new teachers, people to move to those school districts that, they've really updated and renovated the entire school based on Biden's infrastructure plan, which is another big piece of this is renovating schools. Now, Republicans are not interested in that, on the schools being part of infrastructure, which, okay, like, how are schools not part of our nation's infrastructure? But leave it to Mitch McConnell. Leave it to Turtle Boy Mitch McConnell, who I guess has other ideas, So again, when they say that real estate is all about location, 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 it's absolutely true. It's not just a reference to like the Barnes and Noble that's down the street or the nice cafe. It's about the stuff that's not sexy, right? As Pete Buttigieg has talked about, the former mayor who ran for president, who's now transportation secretary, he says, look, I like the stuff that's just not, not interesting. It's not sexy. He's like, sewers. Like making sure you have a fantastic sewer system in a city, water supply. Like, it's not sexy, but you know what? If you know that city has the best water, that attracts people who want making sure that their children have great drinking water. All of those things are vitally important. Again, it's not flashy. It's not like the stuff you see in the flashy kitchen. It's the stuff behind the drywall that actually matters the most. The electrical grid, the water system, all of that. A new highway, a new rail yard, new university campus. The evolution of a neighborhood usually starts with one big catalyst. How many of you right now watching can think of that catalyst in your neighborhood growing up? Was there one big, maybe, or new subdivision, or was there one big thing, one new restaurant? Was there one big store that came to town that ended up revitalizing a whole area because other big businesses decided to join and come in as well? I'm sure you can think of that. I know I can. And it's not just a matter of new parks, schools, or subway stations, but it's incredibly important for commercial real estate as well. So we're just talking residential real estate, what I invest in, what we do at Morris Invest, but think about new warehouses, new office space, new small businesses and strip malls that need to come in, new hotels and restaurants. When you have more people moving to an area, you need more amenities, you need more coffee shops, you need all of those things. And that's how we have real growth. A joint study by the Urban Land Institute found that the traditional infrastructure spending on utilities, transportation, and telecommunications is the most important factor when it comes to influencing commercial real estate and development decisions. Now, I know, just talking from my commercial real estate development friends, those are the most important things they're looking at. When they're setting up a grid and they're looking at areas where they're going to build their new office park, I mean, they're looking at reservoirs. They're looking at the stuff we might not think about. They're looking towards access to telecommunications. They're looking forward and towards transportation hubs. All of these things. And any of these infrastructure spending triggers will increase in commercial real estate activity would also help residential investors. The same elevated economic activity that boosts commercial real estate demand should lead to job growth, which also prods both housing demand and rent values in the right direction. So, investing in actual infrastructure for America should be welcomed by all real estate owners and investors. I mean, I can't think of a reason why we wouldn't. The only downside, of course, is exactly how we're going to pay for it. But if we can pay for it through, we have a number of different programs right now and money that we can actually utilize towards these infrastructure bills. There's money in the general fund. There's a reduction in the amount of money that we're spending on bombs. Yeah, we don't need to have a massive $750 billion a year military budget so we can bomb countries that we have no business being in the first place. How about we invest that in ourselves back here at home? How about that? Instead of lining all of the pockets of these defense contractors. So there is a review currently underway on all of this massive defense spending that continues to line the pockets of these defense contractors and big businesses in Wall Street. So good. Maybe we can carve out a little money there. What about tax increases for the wealthy 1%? We'll see. Republicans say no, but we know that that amount of revenue could increase and actually pay for this entire infrastructure project. What about Elizabeth Warren's wealth tax? Elizabeth Warren, of course, calling for a tax on over $50 million in assets. And actually, these are the people who end up like hiding their taxes offshore, hiding their money offshore, end up avoiding taxes. How can Amazon pay nothing in taxes? So these are all things on the table right now. And we were supposed to have an infrastructure bill, a draft of that legislation by Memorial Day. That day has come and passed. Jen Psaki, the White House Communications Secretary, said this week that, or yesterday, said that right now the House of Representatives has a bill that they're marking up. It's sort of overlapping with the Senate version of that. They're hoping to hammer it out a little bit over the next couple of days. Hopefully, maybe we'll see something by July 4th and actually have a draft of this thing. So bottom line is an infrastructure bill. It's something we should all support, as our nation is literally falling behind in just about every major category around the world. Like if we want to become a leader again, it needs to start with our infrastructure. This is something that China has drastically reduced the amount. Like you might think that they spend so much on their military. No, they can't even come close to the amount of money we spend on our military. You know what they spend a lot of their money on? Most of their money? Infrastructure. We want to compete with China. We want to compete with Russia. We want to compete in these areas so we don't get left behind. We need to be investing in our infrastructure. I'd love to hear your thoughts about this. Drop me a comment below and check out all of the resources we have in the comments section below. I'd love for you to download our Freedom Cheat Sheet. That is in the comments below this video. In the description below this video. Just go to morrisinvest.com/freedom to download our Freedom Cheat Sheet. It'll show you exactly how much real estate and money you need in order to live financially free. We're going to go through your expenses and figure all of that out. It's totally free. So go ahead and grab that in the description below. All right, I'd love to open it up for some Q&A now. Here to talk a little bit more about anything that's on your mind, real estate, finances, etc. And see what you guys think about this infrastructure bill. I mean, do you guys think we're going to get it passed with $2.3 trillion, or do you think that Republicans are going to get this thing watered down? How many of you are interested in investing in those areas where we could see areas that are maybe a little sketch that could definitely benefit from an infrastructure package? Anybody have any comments, questions, thoughts? Let me just see if I got this. Steve says, yeah, well, if they make the area better, people want to live there, and we can pay for it. And we can pay for it with weed. Yeah, exactly. That's another thing we can do, which is pay for it with cannabis. Legalizing cannabis and cannabis taxes. I mean, look, we're already seeing certain areas being able to pay for all kinds of programs because of cannabis taxes. So yes, legalize cannabis, for crying out loud. Canada learned that. Stephen Parsons says Demons and Republicans never see eye to eye. St. Kitts, nice to see you, Ricky Brown. Hey, Rob, just joined the group. Thanks so much, Rob. Steve says, I think a recent article said that states who legalize and sell weed have made $8.7 billion in revenue. Yeah, it's not even about smoking it. I mean, it's about everything. It's about tea. It's about medicines. I mean, it's about textiles. It's not about smoking it. I mean, some of these cannabis guys who run these cannabis companies, they don't smoke it. I mean, they don't smoke it at all. They use it in teas and different things to benefit them. Natalie is here. Theo B says, please provide the pros and cons of interest-only mortgages for investment properties. Or hemp, Steven says, yeah. Well, interest only, obviously, if you're only paying interest, remember the two, we write about this in our book, but the two biggest issues your two biggest enemies with a mortgage are interest and time, right? If you're paying an interest-only mortgage, you're obviously not tackling the principal balance. And so it depends, like if you're going to do a 5-year interest-only note, what happens in 5 years? We know that interest rates are going to be rising. Excuse me. So obviously the con is not knowing what happens with the market. And we all remember what happened in 2008 when people had interest-only balloon mortgages that came due. The idea was that in 5 years, great, we'll be able to refi, we'll be able to do, and then what happened? The home value plummeted because the market dove. They didn't have a job. They were left with a foreclosure. So interest only, you're only paying the bank's interest. Ong Foy says, is it a good time to buy a house? Well, I guess it depends on what. I mean, if you're buying a house to live in right now, I mean, interest rates are going up, but it's a seller's market. So it depends on what, I think of like owning a home to live in yourself is not a performing asset. So, but rental prices are going up. So again, the numbers need to make sense. Are you planning on staying somewhere for a long time? Interest rates are incredibly low, but wouldn't it make sense right now if you had money for a big down payment to use that money towards the down payment of rental properties so that are providing cash flow for you as a performing asset, a hedge against inflation, and a tax shelter? And then you could take that $3,000-$4,000 a month in cash flow and use that to live in the house you want, rent the house you want somewhere, instead of taking a huge down payment and putting it towards a property that's not a performing asset. It's an asset, but it's not performing. It's taking money out of your pocket. Rose wants to know, are we in a housing bubble? Do you think prices will continue to go up? I don't think there is anything such thing as a housing bubble, one housing bubble. I think every market is different. So San Francisco is totally different than Miami, totally different than West Texas, to Midland, Texas, to Ohio, to North Dakota. So what I notice in the market is, you're seeing rent prices going up, building demand leveling off, starting to tick back up again, building demand again. If this infrastructure package goes through, there's going to be an unbelievable demand for building across the United States. We have an affordable housing crisis in the country. We need as many units as possible. We're upwards of 20 million. We don't have them. So to me, all real estate is local. Again, where we build our properties for Morris Invest in West Texas and those areas, no, there's not a bubble. There's growing population. There's great jobs, low crime, low vacancy rate, a diversity of jobs. And that's why we continue to build there, because the demand is going to continue to grow. And the forecasts for 5 years and more are steady growth. So that's why we continue to build. Is that different than San Francisco? Absolutely. San Francisco now is dealing with incredibly high rents that have really come down as people are deciding, hey, do I even need to live in a city anymore after a pandemic? If I want to work at Twitter or, Google, do I need to work there and live there anymore? Can I live out in this countryside? And so why would I pay $5,000 a month to live in San Francisco when I could live really well with more space an hour away in California and not deal with all the craziness? So there's always going to be differences in these markets. Hope that answers that. Rose, thank you for that question. Why is this not letting me? There we go. see. I should be able to click on this, and I don't know why it's not letting me unlock the chat. It doesn't let me do that. Let's see here. Question is, in your opinion, why is this covering my screen? Ron, in your opinion, historically, what percentage of allotted spending actually gets to the project it was intended? Are you talking about government spending? I mean, the problem with government spending is, that there's a lot of these arbitrary numbers, and you have a lot of different local companies competing for different grants. And actually, it's, typically they end up kind of picking the middle of the road. You think, okay, when these government grants come in, they don't usually go for the low ball. They don't go for the high one. They usually end up going for the middle on a lot of these projects, which is actually pretty good. But then we remember what happened during the Obama years when these projects, these shovel-ready projects, right? Money was allocated, but these projects weren't shovel-ready. And we know what kind of a disaster happened back then. I think the Biden administration at least hopefully learned their lesson from what happened during the shovel-ready projects era of the Obama time. Laura Clark says, who will manage the rental properties? Are you talking about our properties? Well, like our properties at Morris Invest, we've got property management teams that manage the properties that we're building. So new construction, the team, we've got a great team in place for that. Thank you for the thumbs up. Hey, Tomas. I would say watch my daily live show at 9 a.m. Eastern time. That'd be the best way. Yeah, Grover just finally came back. Did he? Oh, yeah, he's over there now, I think. Hey, you going to settle down now, finally? You're sus. You're sus, Grover. Don't stick your thumb out at us. Oh, man. Thank you, Daniel. I appreciate that. This is Morning Invest, my daily coffee. Yeah, we do a daily live show called Morning Invest on our Morning Invest channel. And what I do there is cover the daily financial news, what's moving the markets, the broader macroeconomic conditions that are happening in the world, looking at interest rates, looking at what the federal government is doing, printing money. And one of the things I talk about is, look, if you're going to invest in short-term things that you're going to pay small-term capital gains on, how do you turn that into real? How do you turn that into long-term store of wealth? And to me, that's real estate. Like, you can have all this like, I will be in some different trading groups from time to time, and they're sitting there and they're calling out trades. They're like, all right, it's going to move. It's going up, like day traders. I have a friend who's a day trader. I wouldn't want to live like that. But if you got, you made some profits in certain areas from your job or other places, how can you take that $30,000-$40,000 and turn that into a performing asset? Like $45,000 is a down payment, like on one of our new construction rental properties, and then have the bank financing the rest. And now you're getting, $15,000, $2,000, $2,500, or $3,020 or $3,200 in cash flow per month from one unit. And now you've converted those US dollars, which is going to continue to lose value month after month after month, and you're turning it into a long-term store of wealth. And that's what we teach you to do on that show. Thank you, Stephanie. Says, yes, I'm a member of the show. Thank you so much. Brandon says, I definitely enjoy your show. Burns through those morning blues while I'm building these war machines at Lockheed. Well, Brandon, you know how I feel about that, but Somebody's got to do it, right? Tonya McCandless says, when buying land for construction, is there a way to defer the payments on land and or the new construction debt service? Deferring it. Well, yeah, I mean, if you're working with a construction loan with a particular bank, I mean, obviously you're doing it in phases. So you're not putting up a full, you're doing it in phases where they're usually allocating money at certain stages. So 20, 25% in different stages of development. So if that's what you mean, I'm not sure if I exactly understand, but Brandon Powers, money, exactly. Well, I hope you take that money and by watching this show and others, you learn like how to really turn that into a long-term store of wealth for your family. Brandon Powers, like, what is considered low income? Well, I mean, I don't know if there's an exact indicator. I mean, what we consider like below the poverty line, but I don't know if like 22 or 23,000 or so is considered poverty level. I mean, look, when you look at minimum wage in the United States at $7.25 an hour, right? $15 an hour is still below the poverty level, and they've been arguing about raising the minimum wage to $15 an hour. Frankly, it should be at $21 an hour to even be on pace with inflation and what we consider to be like a livable wage. So they're arguing about $15 an hour minimum wage, and we're at $7.25 an hour. And yet the numbers show us that we need to be at 21 to really be like living in an affordable living wage and not having to work multiple jobs. Thank you so much. Is that Joshu? I'm not sure if I'm saying your name right. Martinez. Morning Invest is amazing. You're really putting some amazing things together here for the regular people. I've never had my attention span so captivated by someone's patience to teach. Thank you so much. Yeah, did you guys catch our live webinar from last week? We're about to roll out the replay of that. If you guys didn't get a chance, I'd love for you to learn on that. It's about an hour long, and we'll be on there live on the replay answering questions. And what you can do is just get on our email list for Morris Invest. We'll send out an email with the replay. So just go to morrisinvest.com/email. That's to get on our email newsletter for just real estate investing, just Morris Invest. Again, that's Morris as my last name, MORRIS, morrisinvest.com/email. And that can get you on that email list. So when we do that replay, you'll be notified. Stephen was there. Great. Right. I mean, the problem is that people are living, they're working for a wage that, frankly, when you have the US dollar going down in value every month, and then we're not keeping up with that inflation. That's the problem. And so people are working harder for less. And the US government, I mean, again, we're sitting on $25 trillion in debt. And we're going to add an additional $6 trillion to it in the newest budget. And we have no plan to pay it back. So they've got to sort all that out. But in the meantime, you have to take care of your family. And so if your money is sitting in US dollars, there's other banks, even short-term banks, for you to be able to put your money in. I mean, heck, you could even put it in, we have you get, if you go to Outlet, for crying out loud, we've got a partnership with them. And they have, this is the only savings account I use, by the way. So if you go to, I believe we have it set up as morninginvest.com/outlet. If you go to that website, morninginvest.com/outlet, it's backed by crypto, and this is a savings account. So instead of having your money sitting in one of those crappy bank savings accounts, you can at least put your money into this account, and you actually get some extra money when you sign up. If you go to morninginvest.com/outlet, it's Outlet Finance. It's backed by crypto, by Ethereum, and they stake your money basically. So that's why they're able to give you such a high interest rate, 9% interest. So if you've got a little bit of money, 5,000 sitting there, a few thousand, whatever, put it into a savings account alternative like this that's not in some crappy bank account where you're making 0.01% return. Yeah, there's the link right there. Yeah, Christine, you're right. Like also people right now, for people to be able to work, they need daycare. And so the government needs to, and if these, schools are closed or there's other places that are just not open yet, how do you do that? How do you then leave your kids? You don't have the ability to take care of them while the school's closed, the daycare is closed. What are you going to do? And then you can't work. So it's awful. Well, thank you everyone for joining us today, talking infrastructure and real estate investing. Again, if you want to watch the replay of how to get involved in learning real estate investing, we have the replay. Just go to our email, get on our newsletter, which is just morrisinvest.com/email. The link is right there. Let's see. David has one question here. Peter, I'm not sure if that bank is only for U.S. I think it might be. But of course, you could set up like a Coinbase account and put your money into like USDC or something like that, which is also going to pay you a high interest rate. David says, Clayton, if I have equity in a property but a high debt to income ratio because of a current renovation loan on that property, can I use the untapped equity to purchase a home with your company? David, what I would say is I don't know your numbers. The best thing to do would be to just book a call with our team. So just go to our website at morrisinvest.com, David, and then one of our team members can get on the phone with you and kind of go over your specific situation and see based on your numbers. And I think that's the best thing to do. So go to our website, morrisinvest.com, and book a call. I don't know if you've already done that or not, but it's very simple to do. Here's our website. It's morrisinvest.com, and then just click on the book a call button. 30-minute window will pop up, and then they'll call you at that time. You can also get our Freedom cheat sheet on that page as well. But that's probably the best thing to do. Cool. Thanks, David. Thank you, everyone. I'm losing my voice today. Thank you, everyone. I really appreciate you joining us on these live streams every week. If you have any questions, please send them in the comments below. We'll try to get to them here on this video. If not, we'll see you back here next week live. Meantime, hopefully you'll subscribe to the channel. We've got a lot of content here on real estate investing and building wealth for you guys to check out and take things to the next level. Much love to all of you. We will see you next time.